Greetings, everybody. This is Jeff Scott, and welcome to this week's top-down review. What a doozy this market is. I titled today, Bull Trap, Bear Trap, V-Bottom. More importantly, what would Ian say? Now, before I get started, I want to do a couple of quick housekeeping things. The first thing is, because of the deluge of work at home and internet, I guess, getting cluttered, a lot of companies, including Google, YouTube, are throttling. And by throttling, what that means is if you go to YouTube and you, let's just say I wanted to watch this video and I clicked on it, you'll notice there's a gear here in the lower right-hand corner. If I click on that gear, I can go to quality and notice I could have gone all the way up to 1080p. So it will allow me to play in very high def video, but it doesn't set that automatically. So it used to be you could have highest quality, and the highest quality that they give you is not the highest quality. So if you want to increase the clarity, go into quality and take it up to 1080p 60. Mine will even go up beyond that to 4K because I record this in 4K. Second thing, if you could do me a favor, while you're there, go ahead and click the like and hit subscribe, because subscribe will automatically give you notification when I post something new. So I just wanted to point that out. Now, there have been some questions about clarity of the video. I'm not sure if that's part of it. Another part of it is I do record in 4K. So I use a 3840 by 2160 resolution, and I use the 100% scale so I don't make things appear bigger than they are. And it's a good thing one of my friends isn't here, because I know what she would say if I said something like that. She knows who she is when she listens to this. So let's go ahead and let's start the video. This is unprecedented times. It's not a simple decision as to be long, short. Actually, it is. The simple decision is probably to be out. So what would Ian say? I know what Ian would say. Ian would bring up this chart, and he'd say, do not play snakes and ladders with your retirement money. And if you think about it, in the States, we used to play chutes and ladders. And the point here is very simple. If you're 25 or 35, you can play this game because you've got plenty of time to make your money back. But, imagine, you spent your years, you got lucky, you climbed the ladder, you got up to really good place with your retirement dollars, and then you're moving around and you hit the old snakehead and you come all the way back down to where you started. This is what these bear markets do, is they take away your capital. I'm sure everybody's down 10, 20, 30%. Even the major hedge funds are down some. But you don't want to blow up your account if you're in anywhere close to retirement, even if you're in your 40s and 50s, because how many more bull runs do you have left? Now, I also put for that same friend of mine and for my son that FOMO, fear of missing out, can kill your account. The key is to have cash available when the market gives an all clear signal. Do you think we've had one yet? Disclaimer, this is for educational purposes only. Any recommendations I make in the spirit of education, not investment advice. I am a doctor, not a broker. Most physicians lose money with their investments. I am independent. I've paid for the tools that I use. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. One other aside, when I send out the email to the HGSI IO group, there's 3 links. When I put this in YouTube today, there will be a second link. The 3 links are a YouTube link, a HGSI blog link, which is the same feed as YouTube, so you have to do the same adjustment in resolution. The third one is a link to my Dropbox, and that allows you to download the video to your desktop, and that will be the best resolution that this video will have. I always like to call my education and my training to be your own guru, learn from smart people, and then create your own style based upon the things that you've learned. The website for HGSI, which I have no financial relationship with, is highgrowthstock.com. You have a free 30-day trial option, and under investing strategies, you'll see hundreds, if not thousands, of movies by Ron, myself, and others. If you're interested in the John Person add-on, personsplanet.com/HGSI, or is that a /? I never know what it is, but it's leaning to the right. Intro price of $727 is extended through May 1st. It only works if you have HGSI. If you are watching this and don't have HGSI, you'll need to purchase a subscription to that as well. Stock patterns are cyclical. A lot of times it's hard to know where you are. We know where we are. We're somewhere on stage 4 fear, mark down. Now, are we near the bottom and we're ready for a leg up, or are we just beginning? Not such an easy question. Therefore, your approach has to reflect the market. Now, if you think we're at the beginning, then you're probably nibbling on stocks and buying calls. You might be selling puts underneath where you think the bottom is, or if you think we're still in the middle of the downtrend, then you have a different play of buying puts and bear call spreads and selling calls and shorting stock and buying contra ETFs. We'll talk about where I think we are. Clearly, much of the damage has been done. The question is, how much more do we have? On Friday's sector review, it was a defensive story where the shoots of green were in staples, utilities, and real estate. Certainly not a surprise. If we go into Think or Swim and start to look at the major market indexes, and I like doing this real time in the charts, I think it gives you a much better representation. Here is the E-mini. Do you see a tradable pattern in this? It looks like a straight shot down. Now, I guess if I wanted to be bullish, I could say that maybe we'll do this at HGSI. If I drew a trend line here and a trend line here, we broke out of a falling channel. That's kind of nice. Not on great volume, I'll point that out. Stalled here at the falling 17-day simple moving average. Have a new John Person buy signal. Clearly a reversal day with a doji. Now the question is, and we'll look at this a lot today, is that the bottom, or is it just a bottom? If I look across at other indexes, you'll see very similar on the NASDAQ futures, the Dow futures, the Russell futures, all look exactly the same. Then we have the VIX. The VIX was interesting. This is the VIX futures. It had a big fall despite a falling market this week. Moved up a little bit on Friday. Is the VIX on its way down, or is it on its way to a double top? I don't think this will go back. Well, I can make it go back. Change this to monthly. Let's go back to 2009. We actually went back. I don't know if I'd call that a double top, but you had multiple shoots up here in 2009. So we'll see if we have this single shoot here on this monthly. Remember, this is monthly. This is multiple months. This is what it looks right now. Do we have the more typical, you shoot up and come down, or are we going to have multiple shoots as we see right there? Remains to be seen. And I can easily make the argument that we're not out of the woods yet. And I probably will before the day is gone. And then the dollar has come down with some of the actions of the government. Imagine what we just did to our grandchildren's, in my case, unborn grandchildren's future with another 3 million $2 trillion, $3 trillion worth of stimulus, and the Fed burning down its entire balance sheet to put out the fire. It's necessary, but sometimes it'll come back to haunt us. But right now, we got to do what we can to get out of this funk that we are in because of the coronavirus. So that's the dailies. We'll go back into the PowerPoint for the weeklies. Here we go. In the weeklies, you can see the amount of damage, and it's hard to see, but we bounced off the 200 weekly moving average on the NASDAQ futures. We are below it on the E-mini futures, and the Dow futures and the Russell futures are way below everything. You can see the VIX weekly has pulled back some, and the dollar had a big bearish bar last week. Rates turned down despite QE. It's interesting, in the prior couple decades, whenever there was QE, rates actually moved to the upside. I think this is a event on its own that we don't know from experience necessarily what to do with coronavirus. It's standing out with the shutdown of the economy that I've never seen or heard of before. But you can see on both the 10-year and the 30-year a retracement back towards the lows. If I look at the AD lines, you can see a nubbin of both the AD lines and the index turning up on both small stocks and large stocks. If I look at the NYSE, here's the AD line turning up. And on all the futures, except for maybe the TLT, you see a turn up on the Dow, the NASDAQ, the Russell, the transports all turned up this week. Breadth remains weak, but you can see bounces off the oversold line here on both the stocks above the 200, stocks above the 40. If we look at the 3-month new high, new low, you bounced off of the reversal line as well. The daily McClellan, kind of a big green shoot here as a summation index broke way above positive. Perhaps that's a leading indicator, and maybe we got more good to come. The weekly also broke above zero line. Look how far down the summation index got. It got down as low as it got in 2008, 2009. Now, I do want to point out that the bottom in 2009 came after multiple maybe bottoms before, including if you look right here. So just because we're seeing this does not mean it's the bottom. It was a more complex pattern here on that summation index in 2008 going into the end of the year. The buckets, well, if we go back about 10 trading days to the 16th, you can see 99% of the stocks in the S&P 1500 were below their midline or their Bollinger Bands. And if you look at here, about 60% were underneath the Bollinger Bands, clearly oversold, and you saw a move back into the bands. You can see today an improvement with 85% of the stocks below the midline and very few stocks below the bands. Now, we would not expect another Hindenburg on either the NASDAQ or the NYSE, but once again, pay attention when you see them. How many times have we gone back and seen them before any major market drop? They're not a guarantee, but the intent is to drive your mind to thinking what might happen. Notice how the new lows here have now dried up, which is an improvement. This sort of surprised me when I did the market tone in EdgeRater. And you notice a sea of green down here, that all the major market indexes are in a buy signal according to this. And that was a rip-roaring 20% off the bottom rally. So I guess I shouldn't be surprised. But when I see all this black and red and yellow, look at the volatility here. My God, that's unheard of. Sector strength, also in the green across. In fact, if I look here from the Q Edge tool, you can see in maroon, brown, whatever color that is, that over 5 days, all 11 sectors were positive. If you look in the magenta, most of them were negative, except for utilities on Friday. And if you look at 1 month sector here in blue, you could see that we're still down 19.5 on communication, 34% on discretionary, considerably less on staples, 48% down on energy, 27 on financials, 17 on healthcare, 25% down on industrials. IT is down 17%. Materials are down 23%. Real estate's down 29%. And utilities are down 13%. So I guess the winners are some of the defensive, the utilities, the staples. But even real estate's been hammered. And here's the exact percentages if you want to look at 1 month, 2 months, 3 months, 4 months. And really the most impressive thing is look at the last 5 days where discretionary led the way up 22%. Is that a 1 week wonder? I'm going to spend a lot of time today taking a look at that. Canaries in the coal mine, broken and recovery fails at the 200-day SMA, certainly not bullish. The Fred, Bank of America U.S. High Yield Index Option Adjusted Spread, I looked at this yesterday and drove comparisons to 2001 and 2008 and how this was the third spike during the last 20 years. And we only have data going, actually the last 10 years. Actually, it's about 20 years, 99, I think. But you could see it's come down considerably. It's a 1 day delay, so this is Thursday's data. It came out on Friday, 9.29. It got up considerably since I showed you last time. But that's a pullback, and that's probably a positive thing. Now, if you look at, and this is something that just blew me away. If you take the top 25 going back to 1993, so you're looking at 26, 27 years. If you take the top 25 bullish days, your biggest gains, 25 bearish days, and you plot the bearish days in red dots, the bullish days in green dots, 0% and below. So we're only looking at bearish times in the S&P 500. You'll find that some of the most ferocious bull rallies, these green dots, occur during bear markets. And many of these still have plenty of time in the bear market left. Of course, we all like to think of Christmas 2018, where we got a Christmas present of a V-ish bottom and a big rally day on the 26th, which turned out to be the start of the current bull market that recently ended. Now, I like to use some other platforms. I bought Optuma years ago, mostly because it seemed like an interesting charting platform. It had a few interesting things, but more importantly, it had a lifetime, really cheap price with data. So I figured I could buy it once and use it when I needed to. So I put in some resistant lines here, or potential support lines. Some of them were resistance here. 2015 peak and 2016 low were about the same. Support here in the 2015 low. Double top here of 2000, 2007. 2002 low and the 2009 low. And I asked you which of these, and up here is the 2018 low, which of these green lines is going to be the magnet where the market fall stops at? Now, yes, we pulled down below the 2018 low, and we had a big move back up here to where my cursor is. Now, is that a bull trap and we're about to go down and retest? I'd put my money there, but I don't bet. Okay? Is it the beginning of a new bull market? It's possible, and I'll show you some positive things as well as negative things there. Or are we more likely to come back and at least retest? And a retest could be lower than this low, would be okay. Or was this last dive here a bear trap trying to capture some more shorts before the market takes off? I think that nobody knows that answer. We'll know more in 6 months what we ended up doing. but do we have any historical clues? This is a really old chart. Another thing about Optuma I like is the ability to get really old data. And this is looking at, I don't think it's the S&P. I thought it was the NYSE. But regardless, if you look at the 29 crash, all right, we started at $31. We pulled down initially at $20.46. We then had a 30% rally. That rally was followed by a substantial further decline. All right, so that's one time. How about the 87 crash? All right, we pulled back, we ended here at 224,606. We had a 30% retracement. Now, we never really went below the prior lows, but these prior lows were quite a bit below where we were with this retracement. How about 08? We had a 20% retracement after the initial crash, and then considerably lower lows. Now what do we expect? Substantial pullback, and then we had a 34% retracement. Where do we think we go from here? Do we go on to new highs, or do the odds favor a retest or below? I think the odds favor a retest or below. Know your news and earnings. Maybe all this stuff doesn't matter anymore because if it's good, they just discount it and say, well, it'll be bad because of the current coronavirus economy or non-economy. I think the highest prior monthly or jobless claims was 659,000. It was like 3 million. And the market rally. So perhaps we see little reaction to PMIs, CPIs, and the monthly unemployment numbers. We do still have some earnings. These are tough because even if your earnings are good, you warn because you have lack of visibility, you shut your stores. Restoration Hardware, is it on sale, but I'm even afraid to buy it at sale prices. We shall see. Chewy's actually been behaving well. But, earnings can be great if you win. Look at CrowdStrike, but not been a lot of winners. So, a lot of thoughts. The market pullback has matched prior pandemics at around 35% down. But the economic shutdown, continued growth in new cases, state quarantines, etc., suggests that this is not close to over. However, once news flow turns less negative, we could see markets recover prior to the pandemic resolving, even a partial resolution. Last week showed a ferocious rally of 20% from the bottom. The pundits have been discussing whether this is a bottom or not, but I would expect a retest and possible lower lows to recur. No one really knows when this rally will end, but the risk of retest is too high for, I can't spell, can I, at 1 in the morning when I did this? For me to go all in. The Fed and U.S. government have gone all in with $2 trillion of stimulus, personal and corporate bailout, zero interest rates, and more QE. Both seem hell-bent to prevent a severe recession that could even turn into a depression. This is a wild card, but even in 2008/9, the market did not go up immediately after bailouts and stimulus. POTUS, Senor Trump, is aware that no president has been reelected during a recession since 1924, so expect the faucet to continue to flow. I did put some cash to work last week, but I'm keeping plenty at hand. I will likely use any further rallies to take profits. If the VIX remains so high, I will continue to sell calls against my positions, and as we fall lower, consider not buying out of the money puts, but rather selling out of the money puts, because with option premiums, with the VIX being so high, option premiums are really phenomenally high. And sometimes you can get some nice fat premiums and sometimes buy stock at cheaper prices by selling puts. I would rather, however, miss the next 20% rally than get the next 20% or more down. I can always enter the market, and cash is a position, and not having cash makes it difficult to win. So I think I've said all I need to say there, but let's just take a look at some charts. So there are some things I look at for additional clues. So you might think that that's the E-mini in the center chart today. Rapid fall, maybe a little bottoming action here. It's exciting, except this is 2009 March. And I did this because I wanted to show you a couple of things. We came down, these red dots are from, these are bullish, either stretches or headwinds that you get when the market goes too far one way, you get a signal the other way. I look at these as stopping. So you have some stopping signals on the way down. These come from Superior Profit, my friend Cigar, and his wonderful add-on to TradeStation. The next week, after this big week here, which we're going to talk about, we had a person buy signal come in. That will be interesting to see. The histogram was convergence, positive. Even though we were falling on OBV, we crossed above shortly after the moving average. If we look at John's new volume indicator at this 2009 bottom, you could see it becomes positive before the market stops falling, bullish convergence. And then this is what I wanted to call out. This is Roy Kelly's cycle indicator. It paints, it doesn't keep moving, and when it paints a red bar, it calls a pretty significant cycle, in this case bottom or cycle top. And the reason why I'm calling this out is to be fair, balanced, and even a little bit lean towards bullish on this slide. This cycle top nailed the top. And it also, last week, signaled the bottom. Now, if I look at the other things here that I showed you, John's volume indicator is still going down. OBV is below its moving average. The histogram has not turned around. So we don't have all the other signs that we saw the last time I showed you this in 2009. But when I go back, you can see that you don't get, all right, this was a pullback. It's not a major low. There's no red line. You don't get a lot of those red line signals. And you keep going, and you keep going, and you keep going. This was the pullback in 16, no red line. Keep going, and I can already give you the punchline. We're going to probably get my bet all the way back to 2009 before we see another one with a red line. So when things don't happen very often, and when those things that don't happen very often occur, and when they occur, they typically mean something big. I had to point that out to you. Now let's just quickly look at the Russell futures. Have that. The NASDAQ futures. And notice again, it called the top. So is it calling the bottom? And then the Dow futures. So for the camp that wants to be bullish, and believe me, I want to be bullish too. I just don't see the other findings that I showed you in 2009. Yes, on the weekly, the volume has turned positive. The histogram has gone positive. We'll see. Now, you'll notice that we had, on the weeklies, we actually got oversold very quickly. And that's, I think, what this cycle top is telling me. I don't pay that much attention to the cycle tops without the red line, to be honest with you. Those are intermediate, and they're not nearly as meaningful. So if you want to be bullish, there's your reason to be bullish. I'm going to take it a day at a time. I can become bullish very quickly. As I said, I started nibbling last week, and I've got a fair amount of cash sitting on the side. Now, I know you're looking at this and going, how the hell am I supposed to see this, Jeffrey? And I respect that, except here's the deal. I do this for free. I've actually in the past bought 1080p computers just so that I could look better on my free videos. More and more people have gone to 4K. If you download from Dropbox, it's clearly usable. And every time I change the resolution, it's a pain in my tuchus, which is Yiddish for my behind. So I decided to make my life easier and to keep recording it in 4K. For those that can't see it, I apologize. You can go for $300 and buy a 4K monitor. That's like paying me for 2 years and getting a monitor for free. So that's why I've gone to 4K. I apologize for those of you that it bothers. But not to be a jerk, I don't apologize that much. So let's go to the major market analysis. Major markets plus, when you hit the warehouse view, they open up over here. Let's find a top-down view. I'm going to use this one. All right. So here we have what's working, what's not. You can see on this view, I can look at one-day returns, which are mostly red, 5-day returns, of which some are fairly substantial. For example, utilities were up 17%. The S&P 500 on the week was up 10%. That's a major move on the S&P. NYSE was up 11.5%. Russell was up about 11 as well. Let's take a look at some of these indexes. I know I'm coming across bearish, and I'm doing it maybe even more than I really feel because I don't want to leave you going out and putting all your money at work until it's the right time. And the right time will be different for you than it is for me. And it might be the right time, but I want to see more information. More bullish things is we've had 3 Eurekas. Eurekas are our follow-through day. Now, most of the stocks that we look at have sort of done this, which is, well, first of all, you call the low, island reversal, gap up here on the daily chart on the S&P 500. We had an inside bar day on Friday, which could just be a pause. Sometimes you see reversals start from there. We ran into the 17-day moving average, and although this doesn't look like a big move, we all know that if we go from the bottom here to the top, it was, and this was 18.5% on the S&P. I think on the futures it was closer to 20%. So, what do we think is going to happen? We could, clearly, if you're bullish, maybe we do go right back and to take new highs. Listened to a guy named Craig Johnson from Piper Sandler, used to be Piper Jaffray. This weekend, he still has a target of about 3,600 on the S&P. And I do agree with him and other pundits that say that this market, when it recovers because of all the QE, the easing, the liquidity, could go to the moon. And I agree with that. Now, that's why you want to have cash available. We could also see this thing go straight down from here. And remember that PowerPoint, there's lots of potential areas of support. Or, I guess we could also, and I'm going to put this one in brownish, we could also bounce around here, maybe set a new low eventually, and then go up. So if I had to pick what I think's most likely, I'm going to say that to me the most likely one, and I'm numbering them, so we'll look at them again, is in brown here. I think the second most likely one is here. And I think the third most likely one is there. But all of them are possible. So I will look for things like eurekas. I will look at my weekly bongo. I will look at the chart pattern. Is there something here that is a pattern that I could build on? Do you see a pattern in there? As I mentioned before, yes, we could probably find, whoops, don't want that. I want to put that. There we go. I'm sure somewhere in there we have something like this. And we clearly broke out of that channel. That's bullish. I like that. We shall see. Now, if I go back to here, and let's go into this view. And let me go to the E-mini. And let me mess up my view. So I'm going to make this a 60-minute chart. Because I do think if you go into smaller time frames, you know what, I don't like it on this. I want to go into, pause it for a second. I'm going to get this set up. So again, probably looking to make things up so I can feel good about this rally. Here is the S&P 500, the cash market, not the futures. Here was that low. Here was that reversal. It looks a little different than the futures do. But could this be a shoulder? Could this be a shoulder? Could this be a head? And could we have somewhere around here a neckline? And a break above that neckline, it's probably a little lower, might be considered a reverse head and shoulders. That's possible. And if we take a measured move off of that, that's about another 400 move. Look, it's possible. And like I said, you can probably convince yourself whether you want to be bullish or bearish. Interesting market. And notice on the cash market, we actually had a person sell signal come in on the S&P on Friday. Sometimes Fridays are hard to predict. I think there's a lot of backfilling and changes on Friday to get ready for the market. If nothing blows up and is bad over the weekend, perhaps the market will move higher on Monday. Monday's a long way from now, and I've never, I'm a physician. I sort of retired from the practice of healthcare, went into the business side of healthcare a long time ago. And I've never in my life had sitting on my desktop something like this that I'm looking at constantly. And it is scary. 681,000 confirmed, and that's with inadequate testing. And if you look at number of deaths, obviously the United States, from a cumulative confirmed cases, almost looks more confluent than China. Here's the interesting chart. Besides the fact there's nobody in Russia. That's amazing. There's some, but very few. I look at active cases. China's cleaning up. Europe and US are the hotspots right now for this. No shocker, China's locking their border. Russia's locking their border. Russia has 1,500 confirmed cases and 8 deaths, but maybe they lie. This is on my desktop. I'm watching this constantly. This is not something like we've never experienced. So here is the S&P 500. I talked about my thoughts there. I don't think I'm going to show you anything special on the others. Let's go through them very quickly. Dow Jones Industrial Average is the same. And again, not a lot of volume on this bounce. The NASDAQ, the same. The Russell 2000 ETF, the same, just much further low in their pattern. Look how far below its 200-day moving average this is. If I look at the dollar, you see it's pulled back into support. If I look at the volatility index, is it coming down? It certainly would be nice. It looks like it's basically giving a pennant there. It'd be interesting to see if it breaks below, comes back down, or it goes higher. If I look at gold, with the falling dollar, it didn't really do much. It's sort of staying sideways. Now, the interesting thing is, and I said this before, where gold is strong, gold miners have broken down. They recovered some, failed at the 200. And silver struggling as well. Oil, we all know the story of oil, the Saudis and the Russians either fighting or colluding to drive the price down to force out U.S. shale producers. And you could see oil's at pretty much an all-time low, at least multi-year, decade low. So the indexes, yes, you have a little bit of a bump, but in the setting of pretty substantial downtrends. If we look at industry groups, just to get a sense of what's working, now remember we had a super strong week. So of our 175 index groups, and on the person owners, you can actually see how many buy signals or how many of the stocks in an index are in a buy and how many of them are in a sell on this piece. I can drop my 2-day up and I can see 31 groups have a lot of momentum to the upside. Considering the markets last week, that's not that many. 73 have 2-day momentum to the downside. 5-day momentum to the upside. So this is where most of the stocks are because they've been up for the past week. You saw in the PowerPoint the 5-day moves on Q. 95 and 5 days down. So longer term downs are a lot of the things that you might expect. Entertainment, who's going out to Dave & Buster's despite market pops here and there. Exploration, oil prices are down, services down. Cruise lines, who wants to take a cruise? Surprised about food and drug stores. You would think they'd be busy. I know Walmart's had a struggle the last 4 or 5 days. Let's look at the ones that are moving up, and you're going to see the problem with this week. Here's the problem, in my opinion. Just like the indexes, do you see a pattern there that says this is a great stock to buy? It is well below its 8-day exponential, it's at the exponential moving average. It's below the 17, the 50, and 200. It had a death cross, which is occurring on the major indexes as we look at. Everything up here is red. There's nothing down here that says you should buy this yet for the week. Here, it's down a little bit, but had a big doji. It pays a 29% dividend. 29% dividend. If it can actually hold the dividend. Unbelievable. Ladder Capital also had the similar bounce. Now, what do we call these on the way up? These are all resistance, overhead supply. I don't see how things are going to rebound right the way up with this pattern. 20.5% dividend. Redwood Trust, 19.6. Starwood Property, now this one at least has a person buy signal came in. Doesn't have any bullish convergence down here. And a 15%. Are those growth stocks? I call those special situations with a huge dividend and might be something that I'm interested in, but wow. Not real exciting. What about REITs? Some of these will look good. Avalon Bays, maybe the story here is residential. Big bounce, even bigger than the others, clearing the 8-day exponential. I don't see a lot of mobile breakouts coming out of a squeeze with kahunas, pocket pivots. I do see a person buy signal, though. And I see a 3.8% dividend. Prologis, they own a lot of the distribution and other big warehouses. Big move up, probably the biggest move up of all of them. Let's look at that weekly move. 26% move last week, pays a 2.7% dividend. I mean, some of these had some whopper moves. American Tower is going to struggle to get above that 200-day moving average. Ventas, this has gotten hammered, 10% dividend. So are these going to be these shell companies or these companies that basically will have to cut dividends to survive? Or are these awesome plays right now because of that dividend? Boy, great moves. Maybe it's the beginning of something bigger. Large Pharma, Bristol Myers Squibb, great company. Leader Immuno-Oncology, big bullish reversal candle on the weekly. You might even argue that the PMC shows bullish convergence as it got better as the stock price dropped. Pays a 3.2% dividend. That might be a place to go hunting. Large Pharma can be defensive plays. Eli Lilly, at least it's above the 200. AbbVie below. Merck really beaten down. I like Bristol Myers Squibb, probably the best of the bunch, at least based upon these charts. Integrated utilities. I don't usually buy utilities, but you've got the similar pattern except all the way back up to that 200. This was a 21% gain on the week, 2.7% dividend. Southern Company, a big move up on the week, 4.4 AEP, 3.7, and so on and so forth. Are you seeing great charts and traditional setups? I'm not. Maybe this one's a good chart. Ring Central. This is probably one of the 2 or 3 best looking charts that I have. Makes some money intermittently. Actually, it's got revenue. It doesn't make much in earnings. Has under demand, broke above the 50, probably the best pattern, lower left, upper right that I've shown you. It had a kahuna on Thursday. It's kind of at the top of its high jump bar. It was up 29% this week. Verizon and AT&T, both similar, down on the bottom, 6.9% dividend. I usually add to my AT&T when it's bad. When other people want to sell it, I want to buy it because I love that dividend yield. And I may add to some AT&T, not because it's a growth story, not because I love the chart. I love the dividend yield, 6.9%. AT&T is probably not going anywhere. I could go down all 10. I'm going to look at this one. Over the last couple of weeks, I've been talking about marine shippers. Looks like they were a good play. Euronav, no dividend. It was up this week 42%. Frontline, 5.3% dividend. Look at the earnings per share growth on these stocks. It was up this week 47%. And the one that I went in and I've talked about was this DHT Holdings. I said buy it if it breaks above the 200. It did. And it was up this week 25%. It pays a 6.8% dividend and lots of earnings. So, do the charts look great? No, they're sideways charts. But they broke out. They pay big dividends, and they've got pretty impressive earnings per share. Medical equipment. You may see Abbott pop up I'm not sure which group, if it's equipment, devices, or drugs, probably devices, because they're new testing. Dexcom, another beautiful chart, lower left, upper right, breaking above the 50-day moving average. This week it was up 25%. It's had a big run, but look at that earnings per share growth. It's in the diabetes space. Intuitive Surgical. Hard to believe they're going to see a lot of demand here for their robots in elective surgery. 24% move last week. Buying quality products at a deep discount. Tandem Diabetes, one that I've been playing off and on, had a, let's see, %36 move last week, sitting right on its major moving averages. So there are some things that look good. Most of these are beaten up dividend plays. We'll come back to some of these later. All right, so it's hard for me to short until I see where the market's going to go. There are stocks out there that I thought looked ugly, but in this case of a 20% move, I don't want to be getting behind. Hold on a second. The train that's going the opposite direction. I did see some that I'd be interested potentially in shorting, and of course, don't tell me this is last week's. Oh no, I just did something stupid. Hold on a second. I actually use HGSI for a lot of things, including where I store everything. That was next week's. I mean, there are a lot of ugly things. Dollar General, it failed here at prior resistance. Here's a PSAR dot, the 200 days over here. I wouldn't short it here, but it's on a list of potential shorts. Mobile breakdown from a squeeze. Franco Nevada Gold failed at the 50. Lululemon traded up close to the 200. Bad earnings, came down. So there are stocks that I put on a list that if this market continues to go lower, I'll look to short or buy puts in. But I also came up with a list of potential buys. And let's just take a look at those and see if there's anything I want to point out. And there are a lot of them here, mostly because I like to put them, as those who've been here before know, I don't buy them because they're on a buy watch list. I stick them into a radar screen, and in that radar screen, I'm able to watch them intraday. And I put a lot of different signals on this radar screen, ranging from the Q signals to my own signals to Morales and Catcher to John Person. I'm always looking for earnings dates, but I don't want to buy things right before earnings unless I know what I'm doing and I have an edge. These were some of the things I looked at. Ring, you've already seen. Frontline, you've seen. Let's just take a look going down top to bottom. I'll go through the first 10 or so, and then I'm going to call it a day. Ring Central, we already looked at. Lower left, upper right, breaking out. It does not make money, nor pay a dividend. INO, this is a vaccine play for coronavirus. Look, I think the coronavirus stocks will all come back to earth when this is done. Yet, when I look at this, it's clear that it's not done yet. Sometimes during the day, I'll do that every 10 minutes and watch the number go up. Yeah, it's up 3,000 cases since the last time we did this 5 minutes ago. So here's a stock. I never buy this pattern. but sometimes I'll buy it when it comes back to earth. It based a little bit, had a person buy signal come in, a mobile breakout. If it clears this prior resistance, which is the chandelier stop, I will consider going long there. What this means is it's in a sell signal right now from a chandelier stop, and if it breaks above the stop, then that would be a new buy signal, and I would consider buying it. Frontline is another one of the shippers, great earnings, 5.3% dividend. Chewy, this is a retail discretionary pet food online. We love our pets. I'd spend anything for my dog. It's a high close doji here the last 2 weeks. Breaking out here, mobile breakout, looks great. It's an IPO. The problem is it's got earnings this week. Moderna, same story as I gave you on INO. It's a potential coronavirus treatment. I had a buy signal, mobile breakout from a squeeze. Dexcom we looked at. I guess down here in Florida where we have only essential businesses are open, that liquor counts as an essential business. Now, for people that are addicted to alcohol, if you withdraw it, they get this thing called delirium tremens, or we use the DTs. And maybe they keep it open to prevent the DTs. But, you know, I've never drank so much as I have the last week. My wife and I have happy hour every night at 5 o'clock because I'm home. Then we have wine with dinner. So maybe Constellation Brands is going to see an uptick in sales because people are staying at home and drinking. That would have to make up for the lack of alcohol at the bars. It is up 21% this past week. This is the pattern of the day. Deep doo-doo pullbacks and then a move up and a buy signal. Has it gone too far? That's a decision you have to make. NVIDIA has been a leader. Pull back to the 50. I continue to like NVIDIA. It was up 22% last week. Something to watch. We already looked at DHT Holdings and Euronav. Here's a REIT, Extra Space Storage again. Has it gone too far? Is it going to come back, or is it's on its way to new highs? I have no idea. It pays a 3.7% dividend. The problem with something like this, it's moved up off the bottom quite a bit. Where do you put your stops? Lockheed Martin, this is the pattern. KKR Real Estate pays 11%. TK Tankers, another tanker breaking out. Granite Mortgage Trust, 24.7%. Cal-Maine, not a bad-looking chart. Broke out above the 200 here. Pocket pivot. It's in a buy signal. Mobile breakout from a squeeze. When I see zeros, I just assume we don't have good data on that. Those are just some of the longs that I look at. I'll leave this open for you for a few seconds so you can see. Just because it's on the list in no way means I'm going to buy it. Hudson Properties, another REIT. Same story, pays a 4% dividend. It was up 34.5% this week. We came a lot in 1 week. I think odds are we retraced. Do we give up half of it? Do we give up all of it and go to lower lows? Well, I'm not sure anybody knows, except people tell you they know, they're liars. No one knows. All you can do is use the data to get your best guess and make your decision. Again, subscribe on YouTube, hit the like button, adjust your resolution, or for best viewing, download the Dropbox. Goodbye, everybody, and have a safe week and stay healthy.